Hello and welcome to this Tuesday's morning markets briefing. We've got lots to talk about, but firstly, Boeing and supplier shares fall after mid-flight Alaska Airlines accident, as well as that US Congress leaders reach 1.66 trillion spending deal ahead of feared government shutdown. We've got lots to talk about on the charts also, with lots happening on the economic calendar, but we'll come to that near the end, so make sure you stay around so you can see that. Before we get straight into it, make sure to subscribe. But the first article to talk about, of course, is Boeing and supplier shares. Now, Boeing's stock price fell on Monday as investors priced in the financial fallout from last week's mid-flight incident where a door blew out on the Boeing 737 MAX operated by Alaska Airlines. Now, the incident luckily did see no fatalities after an emergency landing took place in Portland, Oregon. Now, this is a topic which we did discuss in depth yesterday, and it was a very important one to discuss going into the week's markets, as we did talk about and predict this was likely going to be the case going into Monday's markets. And we have now seen that sell-off for Boeing and the manufacturing supplier of Boeing as well. And this is important to note, as if we are seeing these large kind of manufacturing incidents and issues in relation to Boeing, we could most definitely see great issues in the future as well for Boeing. But at the same time, some may see this as a new opportunity to get in whilst the stock price is low for Boeing during these times of legal issues with regulators and just kind of public issues as well. But it's interesting to kind of stay on top of these company specific issues always. So we always have that kind of more macro view on the economy, but then we also have that greater specific understanding of certain industries and certain companies, in this case being Boeing. Now, following the incident, regulators have called for the grounding of the aircraft, with the Alaska Airlines flight carrying 171 passengers and 6 crew during the incident. The NTSB will now open a probe into the incident, investigating for negligence. And of course, if negligence is found or certain issues to do with kind of maintenance or quality assurance from Boeing or the supplier for Boeing, we could see dramatic issues for both companies, seeing great sell-offs as a result of that, as we would then expect a great deal of legal issues to arise. And we could also be expecting legal issues even if certain negligence isn't found immediately. We could see customers of Alaska Airlines kind of suing them for negligence, and then them passing that off and passing that blame onto Boeing, and Boeing taking the brunt of it. And we always have to remember, whenever these kind of incidents do arise, how this will affect the industry as a whole. If we are seeing an uptick, let's say in certain instances, if we're seeing a large deal of kind of financial fallout for the industry, or certain companies, this could discourage other companies from kind of participating in certain areas. So whilst it's not clear on what the overall effect might be of this incident on other areas, it's so important to understand what's going on, as this is something which within the airline industry itself could escalate into a far larger thing if it causes regulators to change the way systems are set up, or if it causes a great deal of Boeing, a great deal of financial fallout for Boeing, and therefore allows for a larger kind of the market participant to step in and take Boeing's place. So keep your eyes on this topic most definitely. Now, Boeing's stock has since fallen 8.6% to $227 a share, with its supplier also seeing a decline in its price. The supplier, Spirit Aerosystems, has already been under scrutiny recently due to issues and manufacturing problems over the last year. Now, pilots reported pressurization warnings on 3 flights in the month before the incident, with Alaska Airlines already having placed a restriction on the plane flying for long overseas to Hawaii. So, that's an interesting thing to note, is how in the lead up to this, there were already these restrictions on the plane. So, understanding how much this may be Alaska Airlines' fault rather than Boeing's will definitely be something that's very important to stay on top of. Now, as well as ordering additional maintenance on the light, which had not yet been completed. So that could be another issue of contention, point of contention, sorry. Now, the aircraft was only 2 months old, and therefore investigators are looking in great detail at the assembly records and quality assurance inspections of that part of the plane. There are 215 MAX 9 aircraft in service globally, with the US operating most of them. So, this is definitely an important topic to stay on top of. Not as much to talk about, but keeping up with the issues and understanding how this might affect the airline industry as a whole is so important indeed. That's all to talk about in this article. Next to talk about, though, of course, is US Congress, as it does seem that a short-term deal has been met. Now, Republican and Democrat leaders reached a $1.66 trillion. I pronounced that very poorly. 1.66. Why am I saying it like that? 1.666 trillion agreement on US federal spending for 2024. This comes as an act of bringing Congress closer to avoiding a government shutdown. Now, talking of a government shutdown, this brings us back a few months when we were talking about, McCarthy being ousted from Congress as the Speaker of the House. We, of course, had the Republican rebellion with, the hardline Republicans kind of, going against McCarthy and the great deal of issues which arise out of that. We then had, the issues with supplying Ukraine and other kind of strategic partners as a result of, calls for decreases in spending. And we've also, seen a great deal of fallout going all the way back and until we, of course, had the midterms for US Congress, and as a result, we did see a split kind of legislature, and this has created a great deal of issues for passing certain legislature, and we are now seeing the kind of consequences of that through these spending deals which aren't being agreed upon. And of course, if a spending deal is not agreed upon, we will then see that government shutdown, which is so feared by so many, because ultimately it will lead to so many federal government officials and workers kind of being put onto being taken off the payroll temporarily, and kind of not going into work. So this is a big issue for the government if they're not able to solve it. Now, the agreement also comes in just 2 weeks before the budget deadline. Now, funding is set to run out on January the 19th and February the 2nd, unless a more detailed budget is decided. Now, but any final deal will need to, of course, pass through the divided legislature, which, of course, we've just noted, and signed also by Biden. So, whether this is sided more by the Republicans, it may not be passed by the Democrats or Joe Biden, and if this is more favored by, of course, the Democrats in other areas of legislature, this may not be supported by the Republicans. So, there is a great deal of issues within the legislature at the moment for passing policy. Now, Speaker Johnson wrote to Republicans saying they had secured hard-fought concessions, with this including $10 billion in cuts to the Internal Revenue Service and reclaiming $6.1 billion in unused COVID-19 pandemic relief funds. So it has really been the key kind of message from the Republicans, is this kind of decrease in spending, which we did see going through COVID and now into this kind of period of heightened world tensions, and also a kind of slowing economy and strong inflationary pressures, and this has caused a great deal of spending issues as well. Now, Biden also welcomed the news, saying in a statement that the funding framework moves us one step closer to preventing a needless government shutdown. But the deal has already come under attack from hardliners in Republican ranks, who have pushed for steeper budget cuts and could use their outsized influence to their advantage, as this is what we did see with McCarthy and those hardline Republicans when McCarthy did establish a deal with the Democrats over spending. Now, Chip Roy, a Republican congressman from Texas, called out the framework, calling it terrible, and it's saying it gives away leverage. So this would be one of the more hardline Republicans that we just described. Another Republican rebellion is a dangerous possibility, of course, considering McCarthy's ousting. So this is so important to stay on top of. It'll be dramatically affecting US markets and the dollar for sure. So keep your eyes on this to make sure you understand what's happening. That's all to talk about on the articles, though. Next to talk about, of course, is the charts, where we do have quite a bit happening. Now, to begin with, we do have US indices. Now, most recently, we have kind of been seeing this kind of slowdown, consolidation, and bearish momentum since the start of the new year. And this comes off the back of that strong rally that we did have ending off 2023, and this could be for a large number of reasons why we did see that slowdown going into 2024, sorry. But now, yesterday, it does seem that we are now seeing this return of bullish momentum to the markets, to US indices, and to other US assets. So this is where we need to start, of course, on US 30. Now, price did not reach the 38.20 retracement zone yesterday. Instead, it took a great deal of bullish momentum and moved to the upside yesterday, despite not reaching any of those key areas of liquidity previously mentioned. What will be interesting to see then going into this week and today is whether we then do see this continuation of prices momentum, or whether we do now see this kind of slow back down and consolidation. As most recently, if we do look at the charts from a larger, if we sit back and look at this kind of time frame, it does look like prices ranging around. It doesn't have a clear direction. So who says that price will break its previous highs, because we do not have any of those confirmations with hitting those key fib levels or bouncing out of those key liquidity zones. So keep your eyes on the charts. Next to talk about, though, is the dollar, which is sort of consolidating so far. Yesterday, we kind of saw a continuation of this consolidation that we've been seeing since NFP. In yesterday's weekly market briefing, we did note how there was a great possibility that markets would run to the upside or downside, more likely the upside, out of in response to last week's NFP figure, which showed that more individuals were being added to payroll than previously expected, therefore adding inflationary pressures to the economy, and therefore signaling to us that the Fed will be more likely to keep rates higher for longer. Markets haven't seemed to respond in that way, though, and are continuing to consolidate between these two key liquidity zones and ranges. So what will be interesting to see is whether we do now stay within this range, or we do make a move to one side or the other. Keep your eyes on this. Next to talk about, though, is Euro USD, which not too much momentum as well. Obviously it is paired with the dollar, so however the dollar's doing it's likely that we'll see that mirrored over onto Euro USD. But we're not seeing any momentum really, and it's hard to tell where price may go from its current levels, but we are sitting on that key liquidity zone at the moment, so keep your eyes on Euro USD. Next to talk about, though, is pound yen, which is currently sitting at that key liquidity zone. Sorry for sniffling, don't know why, I've just got a runny nose, but price is sitting at that key resistance level and key liquidity zone, In yesterday's market briefing, we did comment on how, because it was sitting at that key resistance level, it was likely that we did see a sell-off before a move to the upside. But we haven't seen that retracement take place just yet. But we haven't also seen any key momentum to the upside, which has allowed price to break through that key resistance zone. So it's hard to really tell where pound yen is going to go from its current levels. But it's so important, of course, to keep your eyes on the markets when we are in these interesting situations, as if price does make its way down to that 50% Fibonacci mark, we do know there's a great deal of bullish support and liquidity sitting in around there. So it would be likely that we do see a significant bullish move away from that area if price does reach it. So make sure you have your eyes on pound yen. Next to talk about is Bitcoin, which, whilst in yesterday's market briefing, we were actually commenting on how price was sitting at that 61.80 Fibonacci level, and it was sitting at that key liquidity zone. Price was struggling to break out. We did kind of sort of expect, or at least we said, the greatest probability is that we do see this kind of sell-off. We have not seen that though. Instead, yesterday we did see this significant move to the upside with a great deal of bullish momentum being represented with this strong bullish set of candles, with price now even nearing that kind of $50,000 a Bitcoin mark. We're now nearing, of course, the highs that we did see during the Bitcoin upswing not too long ago. So it'd be interesting to see how far and how long we can keep this momentum running for, or whether we might see now a retracement once we do get to the top of this kind of move, whether we do now see a retracement back down to these key liquidity zones. So definitely keep your eyes on Bitcoin. Next to talk about though is gold, which, not too much to say for gold. We have been trending lower though, quite slowly, but overall a move to the downside nonetheless. And price is currently sitting, or at least it's bounced out of a liquidity zone that we have noted, but ultimately, just because price is moving so slow, we're adding on these key support resistance levels, we're adding on these key liquidity zones, but because we're not seeing enough momentum, it's hard to really know how much price is reacting to those zones or not. So definitely just keep your eyes on gold and wait for those opportunities to arise. Lastly, to talk about on the charts is oil, of course, where interestingly enough, going into this week and yesterday, we have seen price break down to the downside, breaking out of this counter trend line that we did see form, where price was bouncing off this key resistance level and liquidity zone whilst trending to the upside on the short term. But ultimately, price has now broken below that trend line that we did note, and is now moving to the downside. How far will price go, and will price ever reach this bottom of the market that we did see be made on December the 13th? It's hard to tell, but it's so important to keep your eyes on oil with the escalating world tensions that we're seeing, especially in the Middle East, where escalating conflict there could dramatically affect oil supply and therefore affect price. So keep your eyes on oil. That's all to talk about on the chart. So lastly to talk about, of course, is the economic calendar, where we do have quite a bit of data coming out today. Now, firstly, we are getting British retail sales data. We're also getting Aussie retail sales data, and then we're getting Eurozone, Swiss, Italian, Eurozone, Swiss and Italian unemployment rate figures. So lots of unemployment rate figures for Europe as a whole to listen out for. As well as that, we're getting Canadian and French balance of trade figures, so listen out for that, as well as the US balance of trade figure, and one Fed official and one ECB official also speaking today. So listen out for all of that. That's all from us, Wildwood Capital. We've covered lots on the articles, lots on the charts, and lots on the economic calendar. Hope you have a great trading day, but that's all from us. See you later. Bye.